And actually, before I do that, do you see how this right here is the same thing? This is that's shaded. Let me take this off. We don't need that anymore. This single candle right here, and how it trades back down into it and then runs higher. That's the same thing that's occurring right here. Rallies up, comes back down into it, and then rallies higher. And then it comes back down into it deeper. Why? Because it left this portion open between here and here. The other day, I was showing a trade where I had the opening range highlighted. It was me adjusting to what was remaining in terms of the opening range. The opening range gap is where we open at 9:30 to where we settled previous day. So that's my opening range. And there's lectures that's been presented about it, and there will be lectures taught going forward. But um, if I confused you, I know I saw a few people post in the comment section of that video saying, why did I have it highlighted there and why not at a higher point? It's because it was already trading lower at the time, and I was only interested in taking the trade when it got down to that lower degree. And just because I'm looking at a position, or let me say it this way, just because you're watching me put on a position and I'm annotating the chart, I'm annotating it based on what I see at the time. And opening range is an evolving thing. Once 9:30 comes and the opening bell occurs, whatever the difference is between that opening price and where settlement was the previous day, that range is going to either, reduce and narrow as it starts to close in and fill it, or reprice back to the previous day's settlement, or it stays open and it just keeps on running. This here, don't worry, I did not forget about why I chose those limit orders, but I wanted to throw this in here. But if I don't talk about it now, I will forget this part. This same area here is this shaded area here. The same idea. It's going up, then it comes back down. Okay, here's another 1, 2, 3 jives pattern. It's gone short. No, it ain't. No, it ain't. That this is an inefficiency. So this inefficiency between this candle's high and this candle's low, it only has one single pass through on the upside. What is it? An up close candle. That means it's a fair value gap in the form of a BISI, buy side imbalance, sell side inefficient, meaning it needs to have, in a perfect world, in a symmetrical market, there's going to be a future delivery of price that's going to overlap all of this and come back down in a perfect world to touch this candle's high right there. But what can it do also? It can, because it's a down close candle, it can trade to the opening of it. Why? Because it's an order block. So it's two things there. It's two PD arrays. So this level closes the inefficiency. So selling down to it. Look at the bodies of the candles. Does it satisfy that? Sure it does. Do the bodies close below the fair value gap low, which is this candle's high? Nope. But what do the wicks do? It digs into this down closed candle. Why? Because it's an order block. So when you're placing a stop loss, you have to confer with what you're trading up against. Is it just one PD array, or is it a PD array that overlaps one another like this thing does? Because look at the complexity of, if you were going to use this as your entry, say this was the silver bullet, because this is exactly what it is. If I was trading this silver bullet, this is how I would have traded it. I would have traded it as it traded right to this low here and touched this. I would have waited to see if it wants to trade into the body of this candle and allowing for, and as much as what? Midpoint of that wick. Why? Because that's consequent encroachment. It could trade all the way back down and touch the midpoint of that. And if your stop loss is just above that, you're getting roasted. And then when it turns against you and starts moving in your favor, you're going to be mad. So these are instances where my stop loss will be a little bit wider than it would be in other instances. If this would have been a bold-faced bearish candle, then I would have only expected it to touch the opening and maybe just below the opening of it. But because it has this wick here, I have to allow for the potential for it to trade down to respect the consequent encroachment of that, which would also upset those individuals that have a stop loss there. It might squeeze them out without needing to trade it below there. You follow what I'm saying? So I act like I'm going to hear you. But the bodies are they're telling me that it's not trying to do that now, because we tried to go down there and then this candle closed. It did not close outside of the fair value gap here. And now we can be long. We can be a buyer. Right as this candle opens up, that's when I would be buying. As early as I can, pushing the button, I'm getting in there. I would, if it was an opportunity for me and if it was a time frame other than a 1 minute chart, and I had the afforded luxury of using the opening price here, I would have a limit order and I would place it at that opening price. So that way, if I got that price or less, that's where it would fill me. And then that would be my entry order, and my stop loss would still be just below here, because it could go one more time and create another mohawk, trade below this one, dig into that one, and then rip higher. So I'm teaching you stop management here also today. I'm giving you a fucking clinic for free. You should be thankful. So over here, same thing, same premise. We have a small little gap there. That's what's being respected with the bodies. You see that? But the wick here, half of that right in here, boom, then it rallies. What's it rallying for? It's being drawn up into that 16,208 level. It's being drawn up there. Do you need it? Do you need it to trade there if you're trading the silver bullet? No. What do you need? You need a liquidity pool. This is one on the day or the session. What is this over here? Is this chopped liver? No. There's liquidity resting above that. So if you were trading the silver bullet, going long based on how I would have traded it there, another opportunity right here because you're trading back into it. What time is this? 10:42. Can you trade it as a silver bullet? Absolutely. Because it's not 11 o'clock or after it, right? So that's the silver bullet using the logic and the drawn liquidity I made public to everyone before it traded there. Go long. Push the button as it happens. Put your stop loss right below there. And just see what happens. When it gets here, close it. But ICT, what if it goes up to here or what if it goes past? Who gives a shit? You don't know it's going to do that when you're doing this. You have to learn that. And in fact, you can see by not taking that partial here, you would miss the opportunity because it comes all the way back down and swipes it. But what is it doing? It's only cleaning up the edges over here. What's this? Relative equal lows. Relative equal lows. This is the old high on the 15-minute chart. If it's support and resistance, this should come down and touch that line. Does it? Nope. But what is it really doing? Cleaning up these relative equal lows. It's trading just below that low here. Bing. Goes back up. Now we're using what? That fair value gap again. That's a reclaimed order block. Reclaimed fair value gap. Difference. There's a difference. It's not an inversion fair value gap. It's a reclaimed fair value gap. It means it's being used again, even though it's wiped both sides of it. The algorithm is going to still refer back to it. Why? Because the underlying narrative has not panned out yet, which is delivering to the buy side liquidity that has yet to be traded to. And now there's larger pool of liquidity because now we have this high that hasn't been purged yet. So this high plus the 15-minute highs, I'm sorry, the old daily high, and then we still have the weekly objective up here. So all of these build on context and narrative that helps you keep your focus on what side of the market you're trading on. You're not falling victim to, I don't know what to do, or let me change my mind prematurely and follow somebody else because they're short in the live stream and you're claiming they made money today and let me just follow them. Fuck all that. You have to be independent in your thought process. So when we traded down below those relative equal lows over here, I'll say this and then we're going to go into the targeting. When it cleaned up this area here, what do we get? We have another run up. We start accumulating inside that same fair value gap right there. Nothing has changed on narrative. The only thing that's happened is we traded down to clean up trailed stop losses, which is a convenient way of picking up a discount when you're still trying to get long for higher prices. The market then does what? It rallies up. Does it rip away and take off? No. It goes right back up here and it allows the smart money to accumulate in here. Let's go long. Why? Because it's telling them, look, I'm respecting something that you would have bought already over here. We've already stopped out. This stopped here and all these clean levels here. All of this, then this consolidation sets the tone for a ramp higher. Now this gap right in here. Why did it go here and not go down? Because the narrative is still it's going to go here and potentially up to here. It's bullish. So when we see this, my mind doesn't say, oh, let's go short there. Or this is an optimal trade entry. This is a perfect selling short. No, it ain't. This is an inversion fair value gap. This to here, right over here. Here's the color I always use. What is it doing? Trades back down to the inversion fair value gap and right into this gap in and of itself. See that? All these things build on one another. But the more important thing is knowing when not to do something and why you shouldn't be doing it. Those are the lessons that I can only give you guidelines on, because the majority of the things you're going to do that you shouldn't do are going to be instigated by your own personality and character flaws. And I know you don't want to hear that, but I have character flaws. I've already said more F words in this presentation than I wanted to. I didn't want to say any, to be honest with you.